Hello, everybody. This is Joe from PrepAgent. It's Monday, yuck. And today we're looking at some finance concepts. But I do believe we also did finance recently last week, so I may jump towards some flashcards as well. But with that being said, let's get started. So let's look at the first question on the board here. In some states, the instrument used instead of a mortgage is A, promissory note, B, negotiable instrument, C, deed of trust, or D, release deed. Way to get it started, everybody. We don't need to go into the details of this, but just a general overview, guys. Do you guys know the difference between a mortgage and a deed of trust? So the basic difference is a mortgage is a two-party system, and a deed of trust is a three-party system. A mortgage uses a mortgagee and mortgagor, and a deed of trust uses the trustor, trustee, and beneficiary. Okay. So the answer is not A, a promissory note, because that is just evidence of the debt, and any type of loan in any form uses that. They all use that. So it's not used in place of a mortgage, it's part of the process. Okay, moving on. The applicant for a mortgage may not be asked about his or her A, source of income used for repayments, B, immigration status, C, national origin, or D, number and ages of dependents. And the answer is C, national origin. At a closing that involves the financing of real estate, the mortgagor must A, secure the deed by signing a mortgage, B, execute a purchase agreement, C, secure the note by signing a mortgage, or D, assign the note to a third party. And the answer is C, secure the note by signing a mortgage. The secondary mortgage market is the market in which the promissory notes are exchanged. Which of the following is not considered a major player in the secondary mortgage market? A, Fannie Mae, B, Sallie Mae, C, Freddie Mac, or D, Ginnie Mae? All right, guys. And the answer is B, Sallie Mae. That's just a made-up thing. Lender knows that the lower the loan-to-value ratio, the higher the A, appraised value, B, probability of default, C, amount loaned, or D, equity. Are there a bunch of first-timers here? George, there's a bunch of first-timers here, so I need my coffee. I haven't gone to Starbucks yet. It's true, George. You know me too well. I feel like you're in my head. How many people are here for the first time? Okay, the answer is equity. What is equity? Hello, Payan. Okay, so what do you guys think? What's equity? Anybody? Anybody? So the technical definition of equity, remember this, is your interest in the property above and beyond all liens against it. Everybody write that down. Your interest in the property above and beyond all liens against it. Your interest in the property above and beyond all liens against it. And what that basically means is after you pay everybody you owe money to, it's what's left over in the value of the property that you could essentially take home and go buy a cookie with. It's your money. What is a lien? What's a lien? What is a lien? Anybody? A lien is money owed. What is the difference between a general lien and a specific lien? What is the difference between a general lien and a specific lien? What do you guys think? The difference between a general lien and a specific lien? General takes all property. Specific takes one thing specifically, like your house. Whereas a general lien could take everything, such as your house, your car. They could, take money in your bank account, things of that nature. I don't know if they could take money from your bank account, but you guys get the idea. Okay. Can you guys give me the example of a general lien? Give me an example of a general lien. Congratulations, Erica. Everybody say congrats to Erica. Okay, general lien would be income taxes. Good. Income tax would be an example of a general lien. Also, a judgment lien. What would be an example of a specific lien? Give me an example of a specific lien. Specifically, like a mechanic's lien, property taxes would be a specific lien. Good. Remember, property taxes are specific liens. Income taxes are general liens. When a mortgage loan has been paid in full, it's important for the borrower to be sure that A, he or she obtains a deed of partial reconveyance. B, the paid note is placed in a safe deposit box. C, the paid mortgage is returned to the lender. Or D, a satisfaction of a mortgage is recorded. And the answer is D, a satisfaction of a mortgage is recorded. Who is the mortgagor? Who is the mortgagor? Are they giving money or are they receiving money? Is the mortgagor somebody who gives money or receives money? Are they giving money or receiving money? So they're receiving money. Okay, so if they receive money, why do they have the OR behind their name? Why? Because we learn, remember, OR gives, EE receives. So why does a mortgagor, the one that's receiving money? Who knows the answer to that? Nice job, TEM Global Enterprise, because they are giving a promise to pay. Because before they receive that money, they give that pledge, that promissory note. Good job, guys. When the supply of a commodity decreases, A, prices and demand tend to drop. B, price and demand tend to rise. C, demand tends to drop and prices drop. Or D, demand tends to rise and prices are not affected. Tomorrow I'll be super peppy. We're doing vocab. Woo! Price and demand tend to rise. Who knows what is the secondary market? What's the secondary market? Anybody know? The secondary market. Secondary market's the resale marketplace. Resale marketplace. All right, good. Why does the secondary market exist? Why does the secondary market exist? Why does the secondary market exist? What do you guys think? So oh, nice job, Tanya. So it frees up the primary to loan to others. Yeah, it's so that the primary market has money to lend out. Good job. What does the term quiet enjoyment and possession mean? A, the right to tell your neighbors to be quiet. B, free from all encumbrances. C, nuisance created by adjacent landowners. D, possession without disturbance from owners of paramount title. And the answer is D. Totally, Amanda. I agree. Paramount means a higher degree of ownership. So like a landlord has paramount title over a tenant. Hope that helps, Sherry. It's okay, Amanda. Your webinars are not on the web. Your neighbors are not on the webinar. It's okay. Okay, the type of real estate loan that allows the lender to increase the outstanding balance of the loan up to the original sum in the note while advancing additional funds is the A, wraparound mortgage, B, growing equity mortgage, C, open-end mortgage, or D, graduate payment mortgage. It's open-end mortgage. Open-end mortgage is like a credit card where you can just keep borrowing against it and borrowing against it, increasing your debt. If the principal no longer desires the broker to act for him during the period of an exclusive right to sell listing, he may A, revoke the agency created by the listing contract but may be liable for damages. B, not revoke the agency because an exclusive right to sell listing is an irrevocable contract. C, be forced to sell his property. Or D, revoke the agency created by the listing contract. Okay, revoke the agency created by the contract but be liable for damages. What is an exclusive listing? What do you guys think? What is an exclusive listing? What is an exclusive listing? It means there's only one broker. One broker. What is the difference between exclusive agency and exclusive right to sell? So there's two types of exclusive listings. There's exclusive agency and exclusive right to sell. What is the difference in those two? So you have an exclusive listing, which means there's one broker. And then under those, you have exclusive right to sell and exclusive agency. So exclusive right to sell, the agent gets the commission no matter who brings the buyer. An exclusive agency is when the agent gets the commission unless the owner sells it themselves. Okay, so no other broker could be involved, but they do have to prove that they are the cause of the buyer. So which one of those do you not need to prove that you're the procuring cause of the buyer? Which one of those do you not need to prove that you're the procuring cause of the buyer? What do you guys think? And the answer is exclusive right to sell. Good. And just so you guys know, we're at the same time this week, all throughout the week. It's 10 o'clock Pacific time, 1 o'clock Eastern time, all throughout the week this week. Marilyn is applying for a loan to finance her new home in an area where there are minorities. The loan officer tells her that she should try to find another location since the loan committee would prefer not to lend in that area. The lender may be involved in a legal practice called A, redlining, B, steering, C, blockbusting, or D, panic selling. Okay, and the answer is redlining. It's discriminatory practices when doing financing. Well done, everybody. Well done. Give you a golf clap if I could. A salesman asks a broker, other than his own, for $100 advance on his next commission. If the broker pays it, he is A, a good friend, B, committing conversion, C, within his rights, or D, in violation of the law. Says what, Mike? Golf clap? Okay, a real estate broker may never pay to another broker's salesman. Okay, does everybody get that? So you work under a broker. When a commission is paid, it goes to the broker and then the broker gives you their share. Okay, so you can't go to another broker to receive money, or at least not related to the real estate transaction. When a lender speaks of discounting, the lender is probably referring to A, the difference between the nominal interest rate and the effective interest rate on a specific loan. B, the process of determining the effective interest rate. C, the loan proceeds dispersed by the lender are less than the face value of the note. Or D, the process of determining the actual yield of a given loan by adjusting the variable interest rate. Okay, the answer is C. I meant to click C. Accidentally hit B, I swear. Pinky swear. The loan proceeds dispersed by a lender are less than the face value of the note. Okay, when you pay these points, all right, you're taking down the loan amount over the longer term. When the term beneficiary statement is used by those in real estate finance, it identifies the statement made. Yes, and that's points. Okay, A, by the insurer stating the amount that the loan will be paid to the policyholder if the improvements are destroyed. B, by the property owner listing the beneficial features of the assumable loan. C, by the lender as to the current balance due to pay off the real estate loan. Or D, designating the one who will receive the property in the event of the borrower's death. What do you guys think? C, by the lender as to the current balance due to pay off the real estate loan. Woman owns one of 20 houses in the new development in a fee simple, along with 5% ownership share in the parking facilities, recreation center, and grounds. What type of property does she own? A, a cooperative, B, a timeshare, C, a land trust, or D, a condominium? The answer is D, a condominium. So the condo, you have a percentage of the shared facilities, like the recreation center grounds, like they say. A co-op is when you have a share of each other's property. So a co-op would be like if there's 10 properties, you own 10. If you have 10 properties, you own 10% of all 10 units. Okay. A condo is when you just have your unit and that's it. Right? But it's shared ownership with all the things that are common area. The primary activity of Fannie Mae is to A, buy and sell only VA and FHA mortgages. B, act in tandem with Ginnie Mae to provide special assistance to times of tight money. C, guarantee mortgages within full faith and credit of the federal government. Or D, buy and pool blocks of conventional mortgages and sell bonds that use them as security. And the answer is D. Good job, Sherry. A purchaser cannot qualify for conventional financing and negotiate a contract for a deed with the seller. The buyer in this agreement, A, has a full legal interest in the property. B, has possession and pays the property expenses and taxes. C, receives a deed to the property at closing. Or D, must lease the property for the seller for the duration of the contract term. What do you guys think? And the answer is B. Okay, do you guys know the difference between legal title and equitable title? Who knows the difference between legal title and equitable title? What is the difference between legal title and equitable title? What do you guys think? Equitable title is the right to use and possess and gain equity. Legal title is the right to sell. When you guys get a loan, who holds legal title and who holds equitable title? When you guys get a loan from the bank, who holds legal title and who holds equitable title? Okay, so the borrower holds equitable title and the lender holds legal title. Why does the lender need that legal title? Why does the lender need that legal title? Okay, so they could sell it in the case of default. Good. A borrower pays $200,000 for a home, makes a down payment of $40,000, and obtains a loan for the balance of the purchase price. The lender charges 4 discount points for a loan. How much will the borrower pay in points? A, 6,400, B, 12,800, C, 16,000, or D, 8,000. What do you guys think? And the answer is 6,400. Because you guys remember, a point is a percentage of the loan amount, right, everybody? A point's a percentage of the loan amount. And if they pay $200,000 for a home and they put down 40,000, that means they're only borrowing is 160,000. And 4% of that would be 6,400. In a fixed rate, fully amortized loan, a balloon payment will be made at the end of the loan. B, each mortgage payment reduces the principal by the same amount. C, the principal amount in each payment is greater than the interest amount. Or D, each mortgage payment is the same. What do you guys think? D, each mortgage payment is the same amount. Good. The majority of money used for loans for real estate comes from A, individual savings, B, Federal Reserves, C, co-op savings, or D, government bonds. Okay, it answers individual savings when you deposit money in your bank account. There it is. Oops, we just did this one. On home loans, the interest which is paid for the use of money borrowed is almost always A, simple interest, B, discounting interest, C, compound interest, or D, annuity interest. And the answer is simple interest. Who here could tell me the purpose of the FHA? What is the purpose of the FHA? Anybody know? What is the purpose of the FHA? Okay, the FHA insures mortgages. Good. Right? You do not get a loan from FHA. The FHAs, they're insured mortgages for qualified loans. All right. A credit score scale used by many mortgage lenders that use a risk-based system to determine the possibility that the borrower may default on a financial obligation to the mortgage lender is known as A, preliminary report, B, FICO score, C, balance sheet, or D, pre-approval. And the answer is FICO score. Good. The discount points charged by a lender on federal VA or FHA loans are a percentage of the A, appraised price, B, loan amount, C, down payment, or D, sales price. What do you guys think? And the answer is B, as we went over before. Usury most nearly means A, illegal rates of interest, B, making loans without the benefit of cosigners, C, lending money at fluctuating interest rates, or D, being capable of multiple usage. And the answer is A. It's like loan sharking. I guess the other way to say it, loan sharking. Bad thing to do. Credit lenders may not discriminate on the basis of age unless the prospective borrowers are out-of-state buyers, part-time workers, minors, or parents. What do you guys think? And the answer is C, minors. All right, guys. that's it for today. And I think they could ask that, but you do not have to answer it. They cannot require you to answer that. I don't know. I'm not a lawyer. Don't quote me there. Okay, but that's it for today, guys. Tomorrow we're doing vocabulary. Exciting stuff. So have a great day, guys. See you tomorrow.